Hello, welcome back. You're obviously in the DBS and DFL studio, and I'm just smiling and laughing because I just cannot believe the things that I'm hearing here on set in terms of insurance and affordability. And we're going to give you some examples. But Claudius was talking to me about those examples earlier today, and he's repeating them, and I just cannot believe them. So for the people who are afraid because they think it's too expensive, it's not. You're just assuming. And maybe you have to start thinking about that. But another amazing thing that sometimes when people are nervous, they start laughing. And not that I'm nervous, but I'm just like, it's unbelievable what you're saying here, Severin. It's unbelievable. Not just the policy, but the fact that you will pay out without people actually coming to you and saying, yes, I've been hit.
Yes, the policy, like I said, is easy to understand. And in the easy to understand, I brought my business card. This is the policy that the client will get. A card as small as that will be their policy. What will be covered is excessive wind and excessive rain. When there is an excessive wind in a particular grid or location, the client who will receive a payout will get an SMS message to say that your policy have triggered and you will get X amount. That message is sent to the insurer and the regulator of insurance, right? The registrar of insurance. He will also get that message. So it creates transparency. Once the client gets that message, then the monies will be sent to his account, whatever amount the trigger says he's supposed to get paid. And he doesn't have to come in and fill any forms to say, okay, this is where I was, this is where I experienced, nothing. And the insurance company will pay. In addition to that, we as insurer will not turn down the client next year if they had 2 free claims this year.
That was my next question. What about the premiums? Do they go up? No,
the premium stays at the same percentage. You will only pay more because you increase the number of bands. So if you've taken $10,000, it will obviously be more than $1,000 cover.
Okay, I got a trick question for you now. When you set these bands, or when you set the premiums and so on, maybe the premium is the wrong thing to say. When you set the trigger, yes, are you setting the trigger at a level that is really improbable that it's going to hit? No, because the probability of a loss can happen at any time. There's an equal probability of it happening. So even if you say a payout might be 10%, you could get a payout of 100%. Let's take Hurricane Thomas, for example, or Hurricane Sandy. It was not anticipated that these things would happen at the latter end of the hurricane season, but it happened. The Henry, for example, some time ago, a year or two ago, had this real freakish rain. So the policy can pay out at any point in time. So we don't know. But then in calculating the premiums, you got the actuary to look at the past experience and what exactly happened. So we factored all of that in. But then there is no increase in premium. There is no trick to it. It's just that you underwrite it and we set the premium adequately. Okay, and what about if I found out, or I get my little Nemo thing saying, oh, expect a storm within the next 24 hours. Can I come to EC Global and say, wow, the rains are coming, I need to get onto this policy? Well, no, we have the safety net sort of adverse selection, it's called. So the client, even if you know it's coming, you still have to wait 7 days before the policy actually sets in. So because you may have a lot of people coming in at one time, yes, but everybody must contribute equally to the pool. So the period is 7 days after or up to 10 days after the initial.
And that's generally an insurance policy. It's going to be more difficult generally for any house owner or householder to come in after June of any year to seek hurricane insurance, flood insurance. It's not, you're going to get it, but it's not going to be as easy as you would get it, for example, in January, because you're now coming into the period of greater risk, and the greater the risk. That's not fair, surely, because insurance is insurance. Why should I have to wait? Because maybe I can't afford it until maybe January, maybe June, maybe I need to save up for it. Insurance too has to save up to pay out, because what one has to understand, the rates are not just set willy-nilly. The rates are set after actuarial science studies are being done. So, for example, people talk about the cost of insurance all the time, Delia. Let's look at the cost of insurance, even before we Severin has brought in is micro insurance, which is basically for those people who claim insurance is expensive. The average policy, the average insurer asks of you generally $6 to $8 and says to you, if you give me $6 to $8, I will pay you $1,000.
Nah.
That is the bottom line of insurance.
No.
The premium rate is per thousand, anywhere between 6 to 8 to 10, depending upon the type of structure and location. Let's look at the average house in Grosley, Castries, Vieux Fort. Concrete structure, about $250,000. The average premium for a house of that nature would be ranging between $1,800 and $2,500 annually. If on the 5th of January you were to pay, you came into the insurance company and you said, I want to insure my $250,000 house, the insurance company says to you $1,800. You pay it. While leaving the insurance company, you just get a call saying your house is just being destroyed by fire. The insurance company is already liable for the $250,000. You just paid them only between $1,800 and $2,500, and within 1 minute of leaving the office, because even if the fire was taking place while they were insuring and you didn't know, so it wasn't, you weren't trying to scheme the insurance company, they'd pay you that $250,000 right there.
That's in January, but what if I did it in June?
The same thing would happen.
In terms of the premium?
The premium might just be slightly higher because insurance is about risk assessment, and the probability of a particular loss in June from hurricane is greater than in January. That's basic because the hurricane season has begun. There was a time, for example, before Hurricane Lenny, we didn't think there were hurricanes in December. We didn't think there were hurricanes in January. So the hurricane season, as Nemo used to tell us, was June to the end of November. And then we had a hurricane in December. So we now understand that the period of risk, of greater risk, is enlarged. So, but the point, the basic point is that what we are asking you is not even equitable to what we are saying we'll pay to you. And that's the basic, the essence of it all. Insurance is not a contract of equity. So for example, you would go into the supermarket, buy a tin of milk. What you pay the supermarket owner for the tin of milk is directly proportionate to the tin of milk that you're getting. Insurance is not that way. We are saying to you, give us $8, and we are paying you $1,000. That is basically what we are saying.
Okay, now we're trying to stress here to the viewers that it's affordable, but what is EC Global doing in terms of this new insurance to make it easier for people to start paying it?
Well, for one, the premium is low. So it's not like a premium that you'd probably have to put out thousands of dollars. I mean, the policy, for example, just as an example, for $1,000 cover, the person might just have to pay $80 for the year. It's not like you paying. That's an example. It's not like you're paying $3,000 for $10,000 cover. So it's a very small premium that anybody. Well, we're hoping people in the lower income bracket will actually buy onto the policy, right? So it's very low. The premium is very low.
When you say
lower income,
yeah,
a premium for a policy of about a $30,000 house, $250 annually. That's one bear every week. One bear. A bear at $5, that's $260 annually. The premium for your house, $250.
You heard that, gentlemen? And you know the good thing about that as well, you can get rid of your pot belly. But the question that I was asking you before, Severin, is how do you determine who is lower income?
Well, anybody, like I said, we the product is targeted as at the lower income bracket.
Okay,
but
so it's
anybody,
just targeted.
right?
Okay.
But anybody who wish, taxi driver, agriculturist, anybody who wish, you could take the policy if you wish.
But the thing is, that it's not going to be worth the while of, say, somebody with a multi-million-dollar mansion to take that policy, because as Severin says, it's limited to $10,000. So it's not going to be worth that person's while to go there. So that in itself is a barrier. So it's really worth the while of the very low income earner, because it only goes up to 10,000. I mean, which businessman who is worth $1 million is going to come into EC Global and buy a policy for $1,000? I mean, there's this joke about Bill Gates that if he were to be walking and $100 bill fell, it'd be cheaper for him to walk away than to stop and pick it up, because he makes more than the $100 per second. So it's the same thing. No businessman at a certain level is going to walk into a policy, into a business to take a $1,000 policy. It's just not going to happen. Okay,
well, that was one of the things that you spoke about in terms of, you know, it's affordable. But what about methods of payment? Can we, I want to ask you that after the break, because we're going to go into the break, but I'd like us to talk about methods of payment, because again, that's another worry for people when they think about insurance. So you're watching Dolor Factor Live on DBS. When we come back, we will open the telephone lines, and you can maybe ask a question that you want related to this policy or insurance in general. And I'm actually feeling really lucky and happy tonight, because of course I've got two knowledgeable and very attractive gentlemen next to me who know their stuff, and that's always going to be attractive to the ladies. And because of that, I think I'm going to give something away to our first caller tonight, who gives us a really nice question. Maybe something that will stomp them, because so far they're doing really well. So stay with us after the break. Give us a call. We'll see you soon.